Okay, you are welcome once again to True Income, and today we are talking about understanding stop loss beyond the basics. So we want to look at it from a professional perspective, a professional point of view. Okay, so let's go to it. Now we are going to understand what stop loss is, what stop loss is not, okay, difference between stop loss and position sizing, because that is where people think that stop loss is a risk management tools, and it's not a risk management on its own. The only place you can use risk management is position sizing. Okay, so people used to take these things together. As a matter of fact, there are some times that if your position sizing is correct, you don't need stop loss. Yes, you can open your positions free, just that if you trade prop firms, some prop firms don't allow that. But if you trade your personal account and your position sizing is accurate, you don't need stop loss, because when price do not go to where you want to get to, you can easily cut it off and then just believe that okay, price. I'm going to show you what I did on GBP JPY, because I was on a trade on, I was on a buy on it 2 days ago. That should be on Monday. It went in profit. What I did, because I knew that that level is not a level I can trust, what I did with my stop loss, and then what I had to do yesterday, and then what I did today again. So I'm going to use those things to give you much more explanation. So we are going to look at difference between stop loss and position sizing, proper application of swing day and scalping as a trader. Okay, so but of course some of the things I've taught you is basically on swing trading, of course, and you can day trade it sometimes also, and then pro tips and closing thoughts. So that's what we want to look at today. So let's look at it one after the other. Now, what is stop loss? A stop loss is a predefined price level at which a trade is automatically closed to prevent further losses. Now, what price is actually doing there is that is a price level, is not a control risk management, but is a price level. The major purpose of stop loss is not to make you to liquidate, okay, because sometimes you have already seen this level. Okay, this particular level price is likely not going to sell beyond this place. So because if price sell beyond that place, that means your buying what is it called, projection is no longer valid, right? Then you put a stop loss below that level and say, okay, if price hits this place, it means my projection of buying is not valid again. It is an invalidation level. That is the work of stop loss. It is an invalidation level. Okay, so it is a tool for protection, not for prediction. Okay, it is to protect you from liquidation. Example, we had this some years ago when we had some market crash. The market in a single day moved over 2,000 pips in a single day. If price, if you have been in the other side of price, maybe price drop for 2,000 pips, that was market crash, and then you, I think it happens within JPY basically that time, and then and you were buying that time, of course your account is going to wipe off. There's no way your account is going to take it. That is the purpose of what stop loss, that unforeseen circumstances, it protects you from it. So stop loss is a protection, okay, not a prediction, and act as a safety net to avoid account wipe out during unfavorable market moves, maybe news and some other things. Now this is what is now germane when it comes to stop loss. It is not an option, it is a must. Like I said, that professionally or advanced level, if your position sizing is accurate, of course you can do without stop loss. But what of the unforeseen circumstances that can happen in the forex market at any time? Okay, there was a particular time that some, I remember a trader give an explanation that he was on he was on oil. He was buying oil and it has moved 50% of his profit already, of his projection. It has moved 50%, and he just left everything open, no stop loss, nothing, believing that he's going to get to where he wants to get to, and then he closed it. And someone, just a stupid guy in at what was it called, Nigeria data, all the militants, Nigeria data militants then happened. They burned one pipeline at Nigeria data, and then what happened? The price of gold drop, oil dropped massively on that day. And what happened next? His account got wiped. You remember that? Good. Okay.
I know that trader.
Exactly. So that is just the whole of this thing. So like I said earlier, is not an option, is a must. So I believe I've been able to correct that notion, because some of you will say, oh yes, Mr. James said that yes, as a professional you can do without stop loss. No, when you understand the purpose of it, then you will not do without it. Okay, just give me 1 minute. I actually stopped eating because of this meeting. Okay, so I believe we thought I've explained here, we are good to go. So let's move on. What stop loss is not? Stop loss is not a guarantee of profitability because you are using stop loss. As a matter of fact, stop loss is protection. So it does not guarantee what? Profitability. It's just to be able to what? Key you down, that you do not lose your account. And because your primary goal as a forex trader is not to lose your funds, either investors funds, either your personal funds, that is your paramount goal. That is your first goal as a forex trader. Not to even make profit is your goal. Your first goal is to prevent liquidation from your account, is to protect your capital. Bob Marley once said that he who fight and run away lives to fight another day. Meaning, if the account that survived today's bad market move, of course can make profit tomorrow, but if you don survive today's market move, you are out. I will give you an example of what happened to me yesterday. I was just forcing GBP JPY because I know GBP JPY will buy, but all of my level that I'm getting in, it was just liquidating that level, and I knew that what I was doing was wrong, but I was you know, what I'm supposed to have done is that I would have used a very wide stop loss that yesterday, because it's still showing massive drop. Now after what happened, maybe when market closed, myself, Lona and Ice, we had a meeting. I think it was after market closed that we had that meeting, and I was telling them, I was confessing to them that today market show me win, but I said something that should come out from a professional trader. Then immediately I saw 1.5% of my capital down, of my profit, though it was my profit, it was not capital itself, but of course profit also has become my capital. I just left the market, I just went out. What you know how to do, if na coke you sabi, go take coke. If na shayo, if you want shayo, go take shayo. Just leave your decks, because your goal is that it should not drop beyond that level. I'm telling you, it should not drop that level, and that is the primary thing. So I'm making emphasis on these things now, okay, so that you be able to understand the way the forex market works. That's what I did yesterday. I just went to go and discuss with my guys. I know that I cannot say one or two things with them and my mind no go calm down. Immediately after the meeting, I could not even remember that. I could not remember. Okay, but though, and I wrote down what I did yesterday. I said that I will never repeat this thing again. Okay, because I know that was what affected me this year. I was doing that thing this year. I was just doing that thing this year, because I was just like, I'm the alpha and omega of the market. But I told myself that now it's enough for me to stop doing that shit. But what helped me actually not to lose my account was because my position sizing, I don't increase my stop loss anyhow. Immediately I have an account, I know the stop loss I want to use for that account. So that was what helped me. So for me to even lose 2% in a day, it's not going to be possible. I'm telling you. And it was because I was even trading GBP, because GBP is a very volatile market. That was what make. Each way I was trading cash CHF, that one, you know, go collect money from my hand. So and all of those things I'm still going to talk about in the next class, okay? Because the next class is going to be a two-phase class also. Okay, after talking about stop loss, we are going to talk about risk management, and I'll talk about all the peers, understanding all the peers. All of them have different ways to approach them. Okay, so it is not a risk management strategy by itself. I said that earlier. Stop loss is not a risk management strategy. Don't let anybody deceive you. You are learning from a seasoned trader. It is not a risk management. It does not determine the risk you are putting on the trade, but it saves you from what? Liquidation. That is the purpose of it. So you don't use it as a risk management tool. Example, you are saying that, okay, me, I just want to put my stop loss at 50 pips. Those things are deceitful, because every opportunity in the market comes with its own unique level of stop loss, come with a level that is invalid, an invalidation level, and that is where you should put it. Don't say that, okay, because I want to just raise 20 pips. I see so many people doing that. Price will hit your stop loss, multiple times, and what you actually want to risk from that account, instead of you to risk that 1%, you eventually risk 3% of it because of where you put the market, and you say that, oh, it hit my stop loss and start going my way, because your stop loss is not in the right order. So we don't use it as a risk management strategy. Okay, it does not always reflect market reversal points. That's another thing. It does not really mean that, okay, when price get to this place, it's going to reverse, so let me put it there. No, it does not. So let's move on very fast. The common misconception: if I use a stop loss, I am managing risk. Not necessarily like that. If your position size is too high, okay, on a $3,000 account, you want to trade gold, and you're already using one standard loss size on gold, and you say that you want to risk 1%, what stop loss can save you from that? Tell me. I want you to tell me that. What stop loss will save you from that kind of move? So risk management techniques begins with what? Position sizing. That you know the right position sizing you are using. Even if you use 100 pips stop loss, even though you use 150 pips stop loss, because your position sizing is already what? Accurate. So if your position sizing is too large, even a good stop loss won't protect your what? Won't protect your account. I'll just give you an example. So risk control starts with how much you expose per trade by your position sizing, not where your stop loss is. So I believe you are following what I'm saying here. I believe you are following what I'm saying here. Are you following me? Please let me know so that I'll be able to recognize if you are getting what I'm saying so far. Okay, good. Let's move on. Okay. Okay, so let's compare stop loss and position sizing. Stop loss, it divides where when you exit a trade if wrong. That's what your stop loss is telling you. So stop loss is to accept your losses and say, oh, at this particular place that price is now, if price get to this place, I am what? I am totally wrong. That is what your stop loss is doing. And what is your position sizing doing? It divides how much you risk per trade. It is the volume. Your position sizing, your loss size is the volume you are risking. So if the volume is too much, with even 2-3 pips, you are out of the market. Okay, so control loss per trade in pips. Okay, so it's control loss per trade in pips, and then position sizing control loss per trade in what? In money, in percentage. Okay, now stop loss is a psychological relief. It gives you a psychological relief. Why? Position sizing is mathematical what? Risk control. So when your stop loss in a place, you know you can go and sleep and say, even if you are wrong, price is going to take you away from this particular level. But what position sizing is doing is that even though you are wrong or you are right, okay, what is going to take away from you is not much. Are you getting what I'm trying to say here? The stop loss is telling you that even though if you are wrong, you don't know the amount of money you are going to lose, because it's going to give you a psychological relief. And position sizing itself is based on mathematics. Is a realistic level. What is it called? Volume that you are putting your market into. So prevent liquidation, like I've said earlier. It keeps risk within tolerance. That's position sizing. Okay, so let's move on. Why we use stop loss? To protect our capital from emotional decision making. I've said that earlier. To avoid margin call. Margin call means say you don't get money again, or full drawdown. Okay, that your 100% of your money is gone. These are things that people don't do, and then they come back later and say Forex is a scam. These are things. That's why I said that all what I've explained to you earlier, they are not the major things about Forex, but these are the major things when it comes to Forex trading. This is actually the eye opening that will open your eyes to profitability. You do these things. These are the things I preach during in my trading room. Okay, and this is what also differentiates someone that is taking signal from a professional trader. Someone that is taking signal does not even know that this trader is out of the trade already, or he has already adjusted his stop loss. But you that you are taking signal, you are still in, and then you are gambling. So even with a very good setup and a good signal, you can still lose your money if all these things is not well arranged. Okay, so when this and what actually brings profitability or professionalism when it comes to forex trading, what brings profitability and profitability and professionalism in forex trading is doing this, not technical analysis. And that is why anybody can claim anything technical analysis wise. Okay, But when you do this, it's what's going to tell you. Like I gave you this year, someone reached out to me, a so-called professional, public figure in forex trading, reached out to me that he has some financial stuff. That's early this year. I said I should get a profit for him. Okay, so I have some little amount of money that time, and then I decided to get a profit for him. As a matter of fact, when I got that profit for him, I got another profit for myself. Fortunately, when I got a profit for him, they were doing promo, so they gave him 2 accounts. I also got it on that promo. They gave me 2 accounts. Now, listen to what I'm trying to say here. After 2 to 3 weeks, this person told me that he has already lost one of the accounts because of the one of the rules of the profit is that you should not risk 1% per anytime you are running. All your trade that is running should not be up to 1%. So he lost that account because obviously he was running 1%. Then the second account again, he said he passed phase 1, he passed phase 2. When he got to the funded account, he has lost it. Me, I still have the 2 accounts running in profit as I'm speaking with you. What makes me to be good, what makes me to be better than him is because I am a good money manager. And there are 4 management when it comes to forex trading. I've said this before. It's another topic on its own. I have a document like this that I've done on this before. Maybe I'll just collect some of those documents and I'll forward it to you. Those are books I'm supposed to sell for you, but I'm going to give you free of charge. Now, we have money management, risk management, self-management, and trade management. These are the 4 things that you must do that will make you profitability. You can see that all of these things does not even come about the indicator and the line and what is it called, trend line, chart pattern, all of those things that we've talked about. No, those ones are to give you eyes in the market. They are your eyes in the market to see opportunity, to spot opportunity. But beyond spotting opportunity, how well can you manage the trade? So these are the 4 things, like I've said. For management, we have the risk management, we have the trade management, we have money management. There's one between trade management and money management. And then we have self management. How you manage yourself. When you know you are not in a good condition to trade, you don't need to do that. Okay, so let's continue. Now, to avoid margin call, I've said earlier, to establish clear trade in validation level. In validation level, meaning that when price get to that place, that level is not valid anymore. The trade is not valid anymore. To increase discipline and consistency. And these are things that I did or that I started doing that helped me to be disciplined and consistent. There's no way you're going to do any of this I've told you that you're not going to be consistent. There's no way. Okay, so let's look at it now. Improper use of stop loss, setting too tight, okay, stop loss stopped out too often. The reason you are being stopped out of too often is because where you are pushing your stop loss is wrong. It is too tight. Okay, setting too wide, over exposure, unnecessary losses, that gives over exposure. No technical or logical basics, e.g. random 30 pips. I remember that time, though sometimes you can use random pips, like say, okay, for me, I want to do 50 pips stop loss. Yeah, I learned that from my mentor. But what you need to do when you are doing that is that when there's now a setup or an opportunity in the market that is above 50 pips stop loss, you will not take it. Okay, that is it. Not that you now reduce the one that is telling that, okay, the invalidation level of this particular stop loss is 70 pips, then you now put 50 pips for it. Obviously it will hit your stop loss and then start going your way. So I believe you understand that now. So chasing price after SL hit, of course you don't know where to put your stop loss. As a matter of fact, myself, when I'm trading with my team, one of the things I used to tell them is that when we set a setup, we see an opportunity in the forex market, I tell them where are we going to put our stop loss. If we cannot see an invalidation level, that trade should not work. You should not even take that trade. So how to proper apply a stop loss. So let's look at it. Use technical structure, support and resistance, swing low, swing high, market structure, breaks. Those are the places you should put it. Another thing I should add here is supply and demand. Those are because those are the levels you want to get in, and below those levels are where the places you put stop loss. Now let me quickly correct this narrative. No institutions are seeing your stop loss. I know that some of you that you have passed through probably any mentor before, they must have told you that yes, institutional traders used to see your stop loss. No institutions. Your $1,000, your $10,000 that you are trading, they don't care. Does not even move the institutions. They don't see it. The only people that can see your stop loss are the brokers that you are using, because you are using their system, you are using their what's it called, so they can manipulate you by spread and by margin. Okay, they can do that. But sometimes during some slow moving hours, they will widen the spread enough to be able to eat you away from your stop loss, because you are using a very tight stop loss. And of course, my team know what I used to do. Immediately I've noticed that with a particular broker, I will immediately, it is when market is going to have low volume, I will increase my stop loss like any other thing. I can put it at 150 pips. Come and hit 150 pips, let me see. Okay, so those ones are brokers manipulation. Okay, those are, and I know that, and there are some brokers, that's why I don't use some brokers. I don't use some brokers. Okay, so and I've told you, when it comes to market condition, broker, not the pro firm now, 10 trade is the best so far currently in Nigeria. When it comes to their tight spread, they have that. We give it for them. Okay, so like I have said that earlier, nobody sees your stop loss, no institution sees your stop loss. Okay, because how will they be able to gather all the data from different brokers? Because we as a retail traders, we use brokers. Our trades are not executed automatically by ourselves, but we give brokers the order, then the others execute those the brokers execute those orders for us, so they can see it at the back end. And then when they see that this person actually is going to still blow that $100 that you found, they know that you are going to burn that $100 or that $10 that you found. They know, then they will trade against you. Those are the things. That's the only manipulation that is existing. But that institutional traders, they are seeing your stop loss. I remember there was a nice city guy I met sometimes ago. The guy told me that where my own stop loss is his own entry, and I laugh. And that time I accept his challenge. We did was it a month or a two challenge? The guy failed woefully, and the guy later collect signal from me. That is it. Okay, because they don't even understand what they are doing. All of those things, they don't understand these things. Not even the technicals alone. So stop loss, nobody see your stop loss, like I've said and I've explained it. Those people that can see your stop loss, if you are using a big book broker, okay, and that's why as professional we are, there's some brokers that let me mention this broker. I don't know, maybe they are still existing in Nigeria. Otta FX. Hey, if you use Otta FX, there's no way you can make money with Otta FX. There's no way you can make money with Otta FX. I remember that time, that's a lot of years ago, over 7 years or 5 years now, when I was newly when I was new in trading. Um, Someone gave me, was it $100 or $50? I can't remember, to trade with. I don't even know that there's what we call NFP. I was using a particular guy's signal. So the guy said that we should sell USD card. NFP was coming. I was writing my project, final project that day. I cannot remember, I cannot forget. So I was watching my phone. I was looking at my phone. I was preparing for project defense. I was looking at my phone. I was looking for project defense. Is it not 130 that they used to release NFP? I just saw that move. Boo. You just go to my stop loss, pram, hit my stop loss like this, start going up again. I was like, waiting with this. And the funniest thing is that normally, if I was using a good broker, because the guy used to use a very wide stop loss, if I was using a very good broker, there's no way he's going to hit my stop loss. But of course, Octa FX, they can use 100 pips for to wide their stop loss. I'm not joking with you. And because only what they want to do is what? They want to have affiliate marketers that they will pay, but some of them they wipe away over the years. Okay, so some of those brokers that practice some of those unlawful stuff, over the time we will not see them again. So consider volatility and time frames. Okay, stop loss you use in a 15-minute time frame should not give you 100 pips or 200 pips profit. I'm telling you the truth. That's it. Because you are using it on a 15-minute time frame, that stop loss, that level cannot be strong. It cannot be strong. It cannot be strong. If I'm using 15 pips stop loss, for example, when I see 30 pips, I'm out of that market because I cannot justify that move. And that is it. That level that you entered, only if you had weight enough, that price should align with your weekly time frame, your monthly time frame, your daily time frame. Then you are now looking at entry on the 15-minute time frame around that place. Then I can give you kudos. If you know how to redefine, what we call it is that you are redefining your entries. Okay, I'll give you an example myself. I can't remember the name of the PA. I think it was something AUD. Was it GBP AUD or AUD? AUD this week. When I was telling Mr. Ice that we shouldn't be buying that pair, look at what he did now. If if you are stay with that buy, okay, you just all of a sudden see yourself in turning to sell. But the buy was not wrong. As at the time I enter the buy, he knows that he's going to buy. But the projection of where he's going to put the stop loss, he now said that he want to swing trade it. When the whole of the weekly movement is telling that it's a bearish move, you are now buying it. Yes, it's not wrong. Okay, maybe you are using entry on 15 minutes or even 5 minutes or any five. I remember someone on TikTok live one day, and one of the biggest lie I've ever received in my Forex journey, someone said that he's using 1 pip stop loss on gold. I was surprised. This guy said that I can use 1 pip stop loss on gold. I was like, guy, I will pay you $1,000 to teach me. Because if that kind of secret exists, I need to know it. I need to know it. But it's all lies because they are just telling the lies up there. And this field is not well known. People don't have the information, and that's why they lie to people all over the place. Okay? So, match with your trading style. Always combine with proper position sizing. Okay? Those are the things that you need to do when it comes to what? When it comes to stop loss. Okay, so let's look at application now. Just a little guide on this. This entry for a buy has 2 entries. You want to enter based on the flag, or you want to enter based on the breakout. Now, this flag itself has not completely means, that's why you can say it has different color. This flag itself does not completely means that it's going to buy yet until a breakout, because that breakout confirms that yes, it's going to buy. But if you enter here, there should be a level here, and below that level is what you are getting in. So the valid level is below the whole of this swing low. So let's look at it. Stop loss type, whether SL based on daily or 4 hours market structure. So if you are using 4 hours of daily market structure, of course you are going to have a very wide stop loss, at least 70. I remember when I first met my mentor, he used 150 pips as stop loss. I know that some of you will be surprised. Some of his stop loss is 150 pips. At that time, he has nothing less than 80 to 90% stop what's called winning rate. 90% winning rate. 90%. Last month that I had 100% winning rate, all my trade I took last month was 100%. I did not lose any trade last month. And some of these things, the secret is that I use wide stop loss. That's the secret. Because you cannot have accurate entry. Don't let anybody deceive you. Some of these people that will tell you that you are using what is it called? No, it's not really about account size. That's where you are getting it. Is that I've already done my own work by using a proper position sizing. It's not about account size. Using 100 pips stop loss does not it. The target is what matters. You are risking 100 pips to get 300 pips, to get 400 pips. Look at my projection on GBP JPY. Now I'm projecting GBP JPY should give me 600 or 700 pips. And now saying that I'm not going to use up to 150 pips. On GBP JPY, I use 150 pips. Yes. I use 150 pips. You are still using 300 pips or 30 pips or 50 pips. It go hit your stop loss. Because I also know the way GBP moves. GBP can move 100 pips against you and then later move 200 pips to your projection within sometimes, within news effect or even normal day. GBP is a very light PS. So when I'm trading it, I extend my stop loss. If you don't know, I call you signal. Me, I make money, you lose. That's the thing. So it's not about me using a wider stop loss now, but it's about that I've already controlled my risk. Even with my 100 pips that I'm risking, okay, I am still, maybe I'm risking 0.5% of my capital. I've said it from the beginning. There's not about capital. It's not about capital, but risk management is from position sizing. So let's continue. So place stop loss below key swing lows or swing highs. That is why we have done higher highs and higher lows, higher highs and higher lows. Okay, I have removed the 55 from mine for now. It's because you don't understand how to trade it. So sometimes it comes like that. You will remove it. It will come up. There was a time I removed gold also. Later on, I now knew that okay, what triggered my gold is that I cannot day trade gold and be successful and be profitable. For me, I don't day trade gold and be profitable. If I day trade gold, I am going to lose it. I'm going to lose that account. But if because gold can move, then if I day trade it, it's I can see 100 entries in a day if I'm the trading gold. I'm telling the truth. So then I stopped the trading it and I started swing trading it. If I see opportunity, I hold it for long. Now I'm not entering gold because there's no clear direction. So let's continue. Volatility buffer. You also give volatility buffer. Add room for spread and risk. I've talked about that earlier. Key advice: accept bigger SL with smaller position sizing. That is what professionals do. If you want to become professionals, do what the professionals do. I have said it earlier. Most of the time I've said this. Okay, if you can change, everything can change. If you are ready to work on what the real people do there, you are going to make money in this field. People that are losing money, you have lost different accounts because your risk management and your trade management is very poor. And where do we start from? Your stop loss. That is the beginning of everything. And then we go to your position sizing. We are going to go to that later and understand the parameters of each PS. When you understand the pair you are trading, you'll be able to move better. There are some pairs I don't trade also because of their low volatility. I don't trade low volatility PS at all. I used to ignore NZD most of the time. NZD is a very slow moving pair, so I sometimes I ignore NZD a lot of time. But when I see, or if that's what I'm left with, okay, I decide to take it. Okay, so let's move on. Let's move very fast. Applications. Okay, I think I've already talked about this. Now, when it comes to um, moderate SL based on 1 hour to 15-minute market structure, that's moderate SL. I just like to do it for those people that do not use, and scalpers. You can see, but for me, I'm a swing trader. I don't disturb myself with this now. Application for scalpers, I don't need all of this. Okay, so now stop loss is a defensive tools, not your old plan. You have to understand what you are using it for. Position sizing through risk management. Position sizing is the risk control. Your SL should match your strategy, style, and market context. Those are the three things. Your strategy, the way you analyze the market, your style, are you a day trader, are you a swing trader, okay, and your what? Market context, okay, what is market presenting you at that time. I can enter some trade and I can say, okay, this market is not going to go my way for now. I can leave even with very small losses, okay, with very small losses, and then when I see good opportunity I get in again. Okay, so now consistent SS strategy, long term survival, that is it. When you are consistent with your SS strategy, you are going to survive the market, and that is the first thing I've said earlier. I just quote Bob Marley in this meeting where I told you that he who fight and run away lives to fight another day. That's the techniques that the what is it called, those that know how to fight war, they use. Because if you can survive today, tomorrow can be a better day for us. August was a very bad month for every forex trader, okay, but of course you know how to manage your risk for you to be able to have that worst case scenario to survive it. That is your key time to do. So a trader without a stop loss is like a skydiver without a parachute. It only takes one what? Mistake and that person don go. That's just it. A trader without a stop loss is like a skydiver without a what? A parachute. Is your safe measure, is your safe haven, okay, and that is what we have. So any question before I go to live chat and show you some examples? Is there any question that you have been pending before now? So I'll go to live example and show you. Any question? Any question? Is there any question? Okay, but let me please go ahead. Yeah, good evening, boss.
Question is, for stop loss, am I to worry about calculating it, or there's a way that it is? Basically, am I to worry about calculating? Is there a way I can calculate how to get my stop loss and all that stuff? And with respect to the pip size, the lot size, and all that.
Okay, now your stop loss normally should not be when I'm saying I want to use a word, but consistency is not what the right word. Should not be the same all time. Should not be the same all time. Your stop loss should not be the same all time, but your position sizing, which is your lot size, can be the same all time. If you look at my account, you will always see the same, almost the same stop loss, lot size, but my stop loss varies. Okay, but at the end of everything, I'm still risking 0.5% of my capital, and when I'm up, I increase it to 0.7, and when I'm up more, I increase it to 1%. So I don't start a profit account by risking 0.5, all of those things, by risking 1% or above 1%. No, because I want to survive first. I'm going to give you some of those techniques later. So now, to now answer your question directly, there are tools in the trading view that we use. There are tools in the trading view that we use. Okay, for example, here now, if I use this ruler, okay, they call it price range. You can see this. Like I said earlier, I use 100 pips on this. Can you see that this is what 110 pips? Okay, so here already I know my that is 100 pips. Then another thing I can do is that I just put my ruler here at where I want to put it. You can see why I put it below this, because like I said, this is the origin of this push. This gap begins here, and that is where price will fill that gap, and that was what price tried to fill up here. Of course, that's advanced trading, by the way. It's not your normal fair value gap. Oh, it's not fair value gap. Oh, please, not ICT fair value gap. So it's an advanced techniques for balance, and that's basically explaining balance and imbalance in trading. So what I can do again is just go to this line that I've used, go to setting, and then you will see the number. This number is what I want to copy, and I'll paste on my position on my normal what's it called, account as stop loss. I'm going to put as my stop loss, and of course where I want to put my stake profit. Of course, I'm not expecting price to get to this place directly now, so I'm putting it. I already put a take profit here. If price break this level, another take profit will be here, and then till we get our what, our final destination. Okay, so this is now 1 to what, 6. At least 1 to 6, 1 to 7 is not bad on this. Okay, though I will not get that 1 to 7 straight away. Now I'm already at 1 to 1 already. I think it's already running 100 pips. Let's look at what is going now. Can you see it's already running 100 pips? That means I've been able to make 1% of my capital. Okay, so if you get to 2%, which I'm expecting to get to that tomorrow, I'm going to do what? I'm going to enter again. And how, let me just quickly digress a little bit. How did I get into this? Okay, I use 8 hours time frame. There's no 8 hours here. You can see, if you don't want to, if you look at 8-hour time frame, these two candlesticks that you are seeing here is actually what, is it hammer? I think it's closed as hammer, or as a dragon slide doji, one of the two. It closed as one of the two, and that was what made me to what, to get into this particular trade. That was what made me to get into this particular trade. Okay, so I just want to adjust something. That was the confirmation. Though I was feeling like it's late already, I said 100 pips, let me risk it now. What I want to make is more, so why am I delaying myself? And you can see what price is doing. That is one. Another thing is that if you don't want to even sit as 8 hours candlestick, 4 hours is already giving you what, a bullish arami, almost teaser bottom, also, because it's almost the same level. All of these things I've explained to you before, so you shouldn't have difficulty with it. So with that, I now put my stop loss below that level, because if price come back and kick away this price, it means this thing is not going. As a matter of fact, if price comes to this level, I'm going to leave this market, because I know that no, it's not going again. What I'm expecting exactly is what is this, and that's what I'm holding it to be. So I believe you are getting what I'm noticing now. So there are tools. Another one is on your MT5 itself. If you tap on your trade, okay, maybe you're already in a position and you tap on it, you will see SL below and take profit below. You tap on the SL, okay, then you can drag it. You'll be seeing the pips. It will be counting the pips level for you. So there are a lot of advanced techniques. MT4, when we are using MT4, we don't have such stuff, but now we have it. So Pauline, I believe I've been able to answer your question. So this is how you can use all of these things to be able to get your stuff. Mr. Ice, are you still using holding USD card?
Yes, sir.
That money na me and you go share am. Okay, so let me read from Mr. Dura. My question, sir. So there, Okay, so there are times when, based on analysis, you see quite a number of opportunities. Let's say five, for example, and all of them, based on technical analysis, seems to be good calls. How do you know which one or two focus on? For instance, USDJPY is calling for a buy. Same with GBP USD. If one is to focus on one, is looking at, okay, Pierre, the only way to, okay, I think I got your answer. Now, based on the explanation that you have even used, okay, go ahead.
Yes, I still sorry for the problem. I mean, for instance, yes, JPY is calling for a buy right now, and then GBP JPY is also calling for a buy. So, in situations like that, sometimes you don't want to focus on one and ignore the other, probably because of how GBP and USD don't tend to go the same way. So, how do you determine which one to focus on, which one to ignore?
Okay, now let me say this. By what you are saying, there's what we call corresponding, is it corresponding or related pairs? There's a particular word for it. I can't remember the word for certain now. Correlating pairs. So like USDJPY, GBPJPY, USDJPY and GBP ask USD to correlate. So normally if you are buying USDJPY, normally, okay, which is wrong, but normally, I remember then I used to use those things when I came into trading newly, but those things are bullshit. Normally, if you are buying USDJPY, you're supposed to sell GBP USD because it assumes that USD is strong, right? But sometimes it's not always the case like that. It's not always the case. Now, from your example already, currently there's no need for you to buy USD GBP. You have to understand that if all of your goal on all of this pair is for a long term, immediately one moves against each other, it means that setup is invalid. The two is not valid, or one of them there's something wrong with it. One of them there's something wrong with it. That's what it means. If it will be long term, let's look at it. GBP USD. Let's just hold on.
That's what I wanted to clarify. So what I wanted to say actually is USD and GBP JPY.
USD JPY, GBP JPY. Okay. Let me use.
And GBP JPY. Yes, not.
I get. Now, one of the things you should understand is when it comes to that case now, where is the you put importance on the level at which those pairs are. I ignored USDJPY because USDJPY has already bought a lot. Okay, but the level at which GBP is can give me more movement. Do you understand? So I now focus on the levels now, not the. Of course, I'm an experienced trader now. So I now focus on the level, not and the potentiality of those pairs, not just to make profit. Or I don't fall in love with any pair. That's the truth. I don't fall in love or with any currency. So if now when USD was not giving us anything this year, we dey sell USD or we no care. That's why we are forex traders. Okay, we no care, we no emotion with. Someone will tell you that I love GBP USD. Now you sabi why can't you trade everything? That's the truth. Why can't you trade everything? Okay, like I said, I ignore some, and the only reason I ignore them is because they are low. What is it called? Low volatility pairs, meaning they can range for long. Yes, cash HF. Thank you, boss. Cash HF can range for a whole year. Let's go and look at it. Cash HF can range for a whole year. You can see now. So I used to ignore it. As a matter of fact, I don't sell anything. If any pair, I don't sell CHF. I only buy CHF because they save even pair. So most of the time when there's crisis in the country, you see people going to CHF because they have Switzerland has a very stable economy. If it's war, do you know? I think they have over. Let me stop recording this now because I don't want this thing to be too long. You did not pay me for recording.